In this video, I'm going to talk about the current events that happened this past week. So on Friday, May 20th, we entered into a bear market. Now, what is a bear market? Well, it's a steep decline or market downturn, usually a drop of 20% or more from recent highs. So as we look at the S&P 500, I've labeled here from our recent highs to our current low on May 20th. As you can see, we are hitting a drop of 20.86%, give or take. Now, what I wanted to show you was a little bit of history. So, bear markets are a regular feature of the stock market. Ever since World War II, there have been 9 declines of 20% to 40% in the S&P 500 and 3 other over 40%. Now, this doesn't indicate our current decline of 2022. We're not including that right now. But on average, stocks took about 14 months to 58 months to recover after those declines. The last bear market occurred in February and March of 2020 when it slid 34%. So as we take a look, you can see here in February and March, we slid 33% here. And if we use that as an indicator of what could happen, basically here's one support line, which will hit about 24% decline, or all the way down here to our other support line, we could hit those exact same numbers back in 2020. Alright, so I wanted to show you guys one last article, and what it says is the broad equities benchmark is on pace for its 7th week slide, its longest weekly losing streak since March of 2001, while the Dow Jones is heading for its 8th straight week of declines, the longest since 1923. And the Nasdaq is also down for its 7th week, its longest stretch since 2011. So basically, just to point it out here for you, is basically right now we are in our 7th week of declines. We're currently about to enter the 8th week. So from our downturn where there's no upside, we're in a 7-week decline. Now when we do that on our calendar, we're starting here about April 1st was when we're declining. So starting April 4th, we have 1, 2, 3, 4, 5, 6, 7, and currently it's Sunday 22nd. We are on to our 8th week. Now, what does that mean for us? Well, I have this chart here to show you. So I'm just going to point out the days, or the weeks, sorry, where we are currently touching. So we currently just finished our 7th week and we're currently going into our 8th week. So back in 1970, we had an 8th week losing streak where we had a negative of 11.7%. 3 months after, we had a 3% loss, and then we started getting some gains. 6 months later, 6.2%, and 12 months later, 29.9%. I want to show you guys this information because maybe this is what could happen. Back in 1980, we had a 7th week losing streak, a 13.3% decline with huge gains, 11.5% 3 months later, 26.3% 6 months later, and 32.6% 12 months later. Now, it might not always turn out that good. As you can see, in 2001, we had an 8th week losing streak. We lost 9%, and in 3 months, we had a 2.6% gain. But then 6 months later, we had 12% loss, and 12 months later, we had a 5.5% loss. Now, as you can see here at the bottom of all these losing streaks and what was to come, we did have an average and a medium, about 8.8% average to a 10.4% medium. Now, what could we expect? I'm not sure, but the only way that we'll figure out is if we start getting out of this fear zone, of this extreme fear zone, and slowly getting neutral. That's when we'll see the economy getting better. that's when we'll see more return from the S&P 500 and from other stocks. Now, basically, I want to show you a little bit more information here. Since 1929, the S&P 500 has entered a bear market 17 times, including this past Friday on May 20th, 2022. Now, the longest period lasted 998 days from September 1929 to June 1932. The shortest was 33 days from February 19th, 2020 to March 23rd, 2020. On average, bear markets result in a decline of roughly 38%, although since 1946, the average loss was less than 33%. So if we go back to our chart of the S&P 500 and we go to our bear market high and we go to our and we put in a few resistance lines, or sorry, support lines here at our lows, basically what you'll see is that if we hit a resistance lines down here, we're going to hit about 24% negative. And if we go all the way down here, we're going to be touching that 33% decline, which is what it's stating here, is that the average loss was around or less than 33%, but as high as 38%. As we look at all the data here, there is so much money in circulation that I don't think that we will have a decline in the near future. I think that we will bounce back. We'll be able to get some gains. Hopefully we can hit numbers like 30% in 12 months time, but just expect that it is going to be a slow growth starting here, and that we won't be able to accelerate as fast as we've seen in the past, where we were able to see this huge jump from the S&P 500 over the last few years after that 2020 bear market. But be smart with your investments and just understand that none of this information is financial advice. I'm just trying to provide you this information to acknowledge maybe the best time to get into the market or to get out. But I feel it could always be different for yourself. This is only my opinion, and I wish you all the best trading. Thanks for watching. Take care.